Okay, this is part two of the video. Next chart I'm going to go over is the NASDAQ composite chart, the dollar sign comp Q. So here, I'll show you this chart. It's a daily chart, and looks like we're having a potential head and shoulder setting up here at a exact same level, the head and the shoulder. As you see here, I actually drew this line before over the weekend. I didn't go over this chart, but as you see here, you clearly have shoulder, head, shoulder. And this is a very bearish formation. Basically, once this line right here, which is called the neckline, once this is broken, then you have a target that is the difference of between the head and the shoulder. So that's quite a drop. So that's what we're looking at right now, and it looks like, as you see here, the shoulder line right here proved to be resistance, and it was actually the 45-day and a 100-day also in that area. Actually traded above it, and then the NASDAQ sold off pretty hard. It was actually down a lot more than the S&P. And as you see here, we have the same thing. You have the negative bar on the histogram, bearish triple P. You have the stochastic cross down, but it's still above 80. But you got an 87 and 91 reading, so it's a little lower than the S&P chart. And you have some negative divergence here on the money flow chart, chicken money flow. Volume was about average. It was low though for most of the day, so it picked up as the day went along. So a lot of the damage was done at the end of the day. So there was heavy volume coming in to sell this market. Okay, so just keep your eye on that. It's in that range right now. Right now it's at close to 22.89. If 21.50 breaks to the downside, it's going to get pretty ugly here in this market, and that's what I'm anticipating will happen for not only this market, but you also have similar patterns in the SPY and the Dow Jones too, I believe. Okay, the next chart I will look at is the euro, which had a really weak bounce. I mean, these are all reasons why I'm bearish right now. I mean, you're up against rock solid resistance in the S&P, the NASDAQ. You're overbought. You have the VIX just coming out of a bullish falling wedge, and you have the dollar very oversold, and it's been in a very powerful uptrend. True, I don't love the dollar chart right now, but you can't deny when you break down the currencies that make it up. The euro, this just looks like it came up, tested this 124 area here, which is a lot of resistance. The Bollinger Band's already coming down. It looks like the Bollinger Bands are going to tighten, and this is going to get ready to make its next leg down. You're not below the 18-day yet, so you can't get aggressively short, but I'm anticipating that it is what is going to happen, and it should happen soon if we start selling off soon. So you want to look for the break of the 18-day on this, and also all the other markets where the markets are trading above the 18-day moving average. Same thing here. You got the bearish triple P pattern on the MACD histogram. The MACD is still going up. It's way below the zero line, and it's way below these other high points. So you have the negative divergence still in place, and the stochastic's overbought, and it's overbought in a very strong downtrend. It's not a market you want to be betting that's going to continue to rise. You have these moving averages are coming down very rapidly. The 45 is at 126, so it's basically these moving averages are capping any upside that this market may have. And if you look at the British pound, I actually think this is going to be the next market that the if you want to call them the Illuminati are going to attack next. I believe will be the British pound. As you see here, we closed at 147.50, and there's a clear resistance line here at the 148 level. You just draw a support line right here. Where do we stop? 148. This looks like a bear flag pattern of sorts. Got a clear trend lines right here, and You have the histogram ticking down. You're clearly overbought, not embedded. 88 and 87 reading. The relative strength is in the 50s, which jives with the market that's in a bear market type of rally, and at that clear resistance, and it looks like we're stifled again at the 45-day. And guess what? I think we're heading back down. And if this market heads down, it's good chance that the euro and the franc trend down too. And if you look at the Canadian dollar, which has been the commodity currency, this also looks like it has a potential head and shoulders on it, which would be bullish for the dollar. You got a shoulder, left shoulder over here. You got the head over here, and right shoulder over here. You got the histogram has been ticking down now for about 3 or 4 sessions. So the momentum is definitely drying up. You see the slope here. It's starting to roll a little bit. It's still above the 0, and you have a stochastic reading that is 86 and 89, and this market is embedded, so you do have to respect it still, but put in a very bearish candle today. So anyway, there's some other charts I want to look at also. Like the I looked at the another reason to be bearish is the Chinese market, and although I pointed this out yesterday before the big white candle that you see there, which was last night, which is based on the currency goosing, I'll call it, in the market. So it'll be interesting to see how it reacts today after the U.S. market gave back all of the gains. I'm assuming that it's going to sell off a lot of those gains, and I would look for new lows. I've never seen I haven't seen too many bottoms, a triple bottom like this, and it looked like it was just ready to roll over and really crap the bed, and we got kind of bailed out with that currency news today. As you see here, the stochastic is turning up though, and you have the MACD is also rising, and you could run a little bit here, but you want to see what the reaction is today. You did pop, close barely above the 18-day. You want to see if it can hold there 2 days in a row. If it can't, there's a good chance that this market is just going to head down and make new lows, and that would also jive with the bearish scenario for the markets. Okay. Another chart I'd like to look at is X, U.S. Steel. I talked about how the dollar may be rising. I've been talking about the gold and silver markets lately, and silver is traded as an industrial metal. Steel is an industrial metal, and this chart, it was in a bullish falling wedge, popped out, and it's really been disappointing. And even today, you have the black candle in there. You opened up at 45, you closed at 44.97. You got the MACD histogram ticking up, and you got the stochastic ticking up. But I'm very skeptical on this. I'm actually thinking, if you see, here's an example of why you need to look at other time frames. As you look at that chart, you're above the 18-day, and everything's ticking up. But if you look at this hourly, you see a clear double top scenario here at 46. There's a lot of resistance, and the MACD is already rolling over. You got the MACD histogram is ticking down. You got like the last 3 hours, and it looks like you have a very large negative divergence here on the MACD. And the stochastic is turning down, and it's below 80. So there's a good chance that this market could test on a downside, and the break here of this 43 area would signal a target of 40 for the double top breakdown. So you always want to be careful, and this is another reason to look at all time frames. All right, I think that's going to be it for tonight. But also, actually, you know what? I'm going to make another video on gold, silver, and PAS, because I was in those positions. I'll just give my opinion on those, and then just some general market talk. And thanks for listening to the videos.